You want what you need, and you don't necessarily don't want to purchase what you don't. That's what Andy Canning is here. He works out of the Redbud office and then here locally, and crop insurance is his forte, and he's good at it. Andy, yours.
So I'm obviously not the main event. I'm kind of an opening act sandwiched between two greats, but I do have some information for you today about crop insurance. A couple little new things, no major changes coming down the pike this year, but also some reminders and some things just helpful to be thinking about in terms of crop insurance, and we're going to walk through some of that stuff for you today. But I want to share with you a story about a farmer who's out plowing his field one day early in the spring, just getting started for the marketing year. And the plow unearthed an object down there in the field. So he climbs down out of the tractor, gets down there and scoops it up and picks it up and shakes the dirt off and rubs it out and finds it's a genie lamp. So he pulls out his handkerchief and he rubs that genie lamp 3 times. You know how the deal goes, right? And the genie comes out and says, "Ah, Master, I will grant you any 3 wishes your heart desires." Well, without any hesitation at all, the farmer says, "Well, that's easy. I wish for $6.50 corn and $15 soybeans." And the genie said, "Granted." Well, the farmer, he's pretty excited, and he's not sure if this is for real, so he pulls out his phone and checks the marketing updates, and sure enough, there was a huge rally in the markets that day. Corn had hit $6.50, soybeans had hit $15. He was pumped. He puts the genie back in the lamp and climbs back up in that tractor cab, puts her into gear, and he's just plowing along just as happy as could be. Having it just made his day. Well, like most of us at farm, you know, he's busy, he's got a lot going on, and pretty soon spring planting turns into wheat harvest and getting the double crop beans in the ground and getting everything sprayed. Then, of course, you know, you got to report your crop insurance by July 15th. And then pretty soon it's harvest time. He's harvesting his grain, his corn, his fields. And at the end of harvest, he realizes he forgot all about the genie. So he goes back out in the shed and climbs up in that tractor cab, and he's digging around in there looking for the genie lamp. It's buried under some feed sacks and a few wrenches and whatever. He pulls that lamp out and holding it, and he says, "Okay." He rubs it, and out pops the genie. It says, "Ah, Master, good to see you again. You still have 2 wishes left. Have you thought what you might want to wish for?" And the farmer said, "Well, absolutely. I want $6.50 corn and $15 soybeans." The genie kind of scratched his head a minute and said, "Well, I've already granted that wish." And the farmer said, "Ah, yes, I know, but this time I'm going to sell." Maybe you've heard that joke before, and probably, if you're like me, I farm also. Maybe you've been there before, and Matt even talked about that. You know, when we get that opportunity, we get $6.50 corn, what's the first thing we think? Oh, it's going to go to 7. And we're going to say, when it gets to 7, and then when it gets to 7, then it's, you know, right? So we want to be able to have a marketing plan and develop that strategy. And you heard Matt talk a lot about marketing this morning, didn't you? And being flexible, having a strategy, and not just sitting on our hands. Crop insurance can help us do that. We can look at your crop insurance APH on all of your farms, however many there are, and everyone in here is different. I know there's some operations in here I work with that are on the very small end of things, all the way up to some very large operations in here. Your size really doesn't matter, because at the end of the day, we can look at that crop insurance and develop a plan, and we could be doing that now, so you can be looking at how many bushels you want to protect. If you have 75,000 bushels, just as an arbitrary number, as you move through the marketing, your net market is moving up and down, and you know, like what Matt said, your cost of production, you know where you need to be profitable. As you take that opportunity to make those sales, you're just going to reduce the number of bushels that you have guaranteed that are protected by crop insurance so that you can lock in some of that revenue, because those bills are coming, you know they are, and they have to be paid. So per Matt's advice this morning, you know, when you're locking in those high expenses, lock in some revenue to protect that. So if you sold the first time and you had 2 more wishes, what would you wish for? And I'm talking about crop insurance here, okay, not yachts and things like that, okay, so vacations. But in terms of farming and crop insurance, probably these things would be top on your list. I know they sure would be on my list. I want good weather and strong commodity prices and the whole bit. And we're going to kind of walk through these things here this morning. And we're going to end with strong business partners. And I believe at Farm Credit, that fifth one we sure can bring to the table. But we're going to talk about the other ones too, relative to crop insurance. So for the 2023 crop year, we're going to start out talking about weather and yield, right? Normally, there's probably an exception, but if you're going to have good yields, good weather, those two things go hand in hand. And so we're all looking for that good stretch of weather because we want to get the planters rolling. And that's going to be here before we know it. This is almost the 1st of February, so we've got another 6 weeks, and we're probably going to be in the field 2 months anyway. But one of the changes that is coming in crop insurance this year that the RMA has recognized is that when we do get a good stretch of weather earlier, and there's been a trend now for people to start planting soybeans earlier, so they've recognized this, and this is one of the rule changes this year, is they've changed the initial plant date on soybeans. This is for the counties up north. The initial plant date was always April 20th. Now it's April 10th. But get down here where we're at in the Highland Market, in Clinton, Bond, Madison counties, and all through the southern part of the state there. April 15th was always the initial plant date on soybeans. Now it's going to be April 5th. So what exactly does that mean to you? The initial plant date is not the day where you can't get insurance before that. It simply means you're going to be covered for federal replant coverage before that date. So if you would plant soybeans on April 4th, they're still insured, but you just forfeit your replant coverage. Well, the RMA recognizes that this is a trend, so they've changed that planting date. I also want to point out that about, probably 2 years ago, the RMA changed the final plant date for double crop soybeans. I know there's some wheat producers here in the room. I also grow wheat, and this was a big win for us because the date ending for soybeans was always June 20th, whether it was first crop or double crop. They changed that double crop date to July 5th. So that allows us a little more time to get those beans in the ground and receive full coverage. And while I'm talking about that, I really want to tell you, and this is just Andy Canning, how my brain works, okay? I don't like the term final plant date because that sounds like it's the end. It's not really the end, it's the final day for full coverage. So if those double crop soybeans don't go in the ground until July 6th, that's 1 day after the final plant date, they're still insured. You just lose 1% of your coverage for every day you go beyond that in what's called the late plant period. The same is true for first crop soybeans on June 20th, and also for corn, which those dates have not changed, but the final date for corn is June 5th. Can you plant corn on June 6th and it's still insured? Yes, you can. It's just reduced by 1% per day after June 5th. Unless you're way far south in Illinois and it's May 31st. Also, if you jump across the river into Missouri, I've got a few of those people. Make sure you check those planting dates because they're just a little bit different. I want to talk about replant, and I know probably everybody in this room at some point in your career, if you farm, your field has looked like this. And Mother Nature isn't always good to us. You know, sometimes we get a little more rain than what we want. The main point here is, and we say this every year, just please call. As technology has gotten really good with these computer systems, the RMA watches, there's certain rules about everything being in time and dated. And when we submit the forms and the documents, us and the adjusters in the system, everything is time stamped and dated. And we don't want to get the cart before the horse and put somebody in a predicament where potentially they could be eligible to receive replant money, but they're not going to get it because we didn't do everything in the proper sequence. So it doesn't cost you anything if you call and say, hey, we just got 3 inches of rain. I think I might have a couple hundred acres of corn I need to replant. And then it comes out okay and you wind up not replanting, no big deal. We just withdraw the claim. It's no big deal. But if you do replant it and haven't called us yet, then that could be a problem. So let's just make sure that we follow the protocol so we don't ever get into a little bit of a predicament. While we're talking about replant, probably all of you also realize that there are supplemental replant coverages and options you can put in your policy offered by all the insurance companies. And there's a couple of marked differences between this coverage and the federal replant coverage, the biggest one being that these pay on the first acre. So with your federal crop insurance, you have to meet the 20/20 rule. If you've heard of the 20/20 rule, 20 acres or 20% of the unit has to be replanted before the federal crop coverage kicks in. These coverages will pay on the first acre. So if you're on optional units and you have a 60-acre unit, 20% of that is 12. So you would have to replant 12 acres or more in order to earn a payment on the federal program, but this one would pay you on the first acre. Now, if you did replant all 12 acres, you would get paid on both ends. You'd get paid with the federal payment, and you would also get the private product payment. Another new item for 2023, if we have good weather, sometimes folks want to split apply their nitrogen, but in many times, you run the risk of being held out of the field during when the corn is growing and getting that second pass on. That's always the risk, right? So RMA recognized that, and they put out this is an endorsement that you would add onto your policy called PACE. And in 2022, I'm going to be honest with you guys, I really didn't pay a lot of attention to it because it wasn't even offered down here. It was only offered in these green counties. But for 2023, now it's available in all counties in Illinois. So if you're putting down all your nitrogen ahead of planting, this probably isn't something for you. But if you split apply, this might be something to look at. You have to elect this endorsement by March 15th. You also have to disclose what % of nitrogen you're going to put down ahead of planting and then post once the in-season pass. This would be during the V3 to V10 stages. You also, this would be an indemnity if you're held out of the field, I want to make sure you guys hear this, by weather, okay? This is not a supply chain issue. This is the first question we all asked when we heard about it, because last year the supply chain issue, that was a big deal. And so if I can't get product, am I going to get it indemnified under this program for that? And the answer is no. It has to be a weather-related event. So there's a few other details. If you're interested about that, please talk to me. Please talk to Adam or any other farm credit agent. We can fill you in on the details and run some quotes on your operation, what that might look like. Good weather and strong commodity prices often go hand in hand, but sometimes they don't. And your field looks like this with the ominous storm in the background. I mean, how many of you guys have sat at home, like me, watching the news or looking at the radar on your phone, and it's the red and the purple storm cell that you're hoping and praying is going to go north or south of your farm and not hit you directly, with the large damaging hail and the high winds and all that? That is the reason we want to put some of this coverage in place ahead of time and not wait until the last minute. Hail coverage can be added at any time, but wind and green snap coverage there's some dates that has to be applied for by. They're a little different, one insurance company to the other, but my recommendation to you is to do it now by March 15 when we're meeting, so you don't even have to think about it in June when you're in the middle of doing 500 other things that you're also busy about. We want to talk about hail coverage and how that works, though, okay? Because I want you to understand and make sure we can wrap our minds around what that looks like when there is a claim, okay? So for easy math here, let's say you have a 200 bushel APH on corn, and you're going to buy an 80% coverage level, right? So 200, 80% of that is $1,200. I'm sorry, I just messed up my math. Look at that. Hey, I used to teach school. Did you know that? If you have a 200 bushel APH and the corn price is $6, that's the $1,200 I was looking for. Then you're going to buy 80% of that. That's $960, okay? So you have a $960 an acre revenue guarantee. That doesn't mean anything when the hailstorm happens in terms of your hail coverage. So you're going to make an election when you buy that hail policy to cover so many $100 an acre of hail and or wind and green snap on your policy. If you elect to cover that to the tune of $300 per acre and the hailstorm comes through and damages your crop 25%, the insurance company is not going to look at that $960 at all. They're going to look at the $300 and they're going to pay you, minus any deductibles or whatever, 25% of that $300. So when your crop is out there and it might look great, but everything's going to come down to how many $100 an acre you elect to cover that crop with. Does that make sense to everybody? So it's kind of two different baskets. If you do get paid because of a crop hailstorm or a windstorm, you could also be thrown into a loss on your revenue protection policy later in the fall. That's when that would come into play, that $960. It could happen, it may not, that's uncertain. But one thing that's different about the hail and the wind and the green snap, when that storm hits and it damages this 40 right here, but you've got 500 acres of corn everywhere else that didn't even get touched, that coverage will pay on those acres. And if you're taking enterprise unit coverage, which probably many of you have, you may not collect anything in terms of your revenue protection because of that 40, because you've got 500 other acres that did, you know, a 230 or a 240 yield, whatever. So it kind of functions separately, all right? Hail coverage includes a number of other things. I'm not going to go through all these, but I did want to mention fire. If you grow wheat, I was talking to a producer last night, signing him up for crop insurance, and he's just now growing wheat for the first time, does not have a wheat policy in place. I said, we can still cover it with hail. Hail covers, obviously, hail, but it also covers fire and lightning. And the cause of the fire is a moot point, but the grain that's in the combine and all the rest of the crop standing in the field, there's no way I would grow wheat without covering that with hail protection. Also vandalism, you know, when the high school kids get excited on Saturday night and they're doing donuts out in the field, destroying some of the crop. I don't know if you've ever had that. We've had a couple claims like that over the years too. Wind, green snap, and extra harvest expense, those are some coverages that you put on in addition with the hail. There's a number of different ways to do this. All of the insurance companies offer these products kind of like a la carte, but they also have bundled products where you can kind of put them together and receive discounts for the more coverage you buy per acre and bundle them together. It is important, and please have the conversation when we're buying this coverage. I know Adam that works here in Highland and myself, we will initiate this conversation with you, but we want to make sure you understand exactly what you're buying. You know, green snap is not when the tops of the corn is all broke out. The field looks bad, but that's not considered green snap under the RMA definition to how you could get paid on crop insurance. The stalk has to be broken off below the ear, and it has to be severed at a joint. I mean, so there's some specific rules. And the wind damage, you know, like when the field looks really bad when it's blown down early, but the corn kind of goosenecks and comes back up, looks terrible. It might be a little difficult to combine, but you know, when the ear's about this high because of that gooseneck, the wind damage is not going to pay for that, okay? That stalk has to be at a certain angle to the ground. It has to be a certain height from the ground, which is pretty small. Non-recoverable with normal harvesting equipment is the language they use, okay? So just want to have those conversations, make sure you understand exactly what it is that you're getting. There are different kinds of deductibles. I'm not going to go through those, just making sure you understand if you have a deductible or how much it is, whatever. So there we talked about good weather, if we're having some good weather, some rule changes that RMA made. We also talked about if we don't have good weather and some replant and coverages we want to put in place. We want to mention a few other things here that are new and different with crop insurance this year, some additional things. And to start off with, I want to talk about the supplemental coverage option and the enhanced coverage option. The RMA, when they put out the language about what kind of policies producers can take, they put the max coverage level at 85%. So you all know you can choose anywhere between 50 and 85%, but an individual farm operation can't take any more than 85%. But there's some producers out there that said, hey, we really would like some more coverage beyond that. And so RMA responded and rolled out these two programs, SCO in the 2014 Farm Bill, and then just a couple years ago, they rolled out the ECO program. I'm going to walk through these with you just to make sure you have a basic understanding of what they are and how they work. The supplemental coverage is something that you have to first make sure you're enrolled in that PLC program at the FSA office. Got all these acronyms, right? So it pays, they both pay based on county performance. So the first thing that has to happen is the county has to have a loss, and then you'll get paid on your individual policy. It is possible that the county would not have a loss and you would, or vice versa, and just how these things are triggered. That's what's important to understand. I'm going to kind of show you some graphs here. This is really a better way to explain it, I think. There's some people sitting in the room that I've drawn this out on the back of a piece of paper before, and it doesn't look near as pretty as this, but this is a very good illustration. So you buy your revenue protection policy somewhere between 50 and 85%. Probably most of us in the room are in the 75 to 85 category right now. You can buy that SCO coverage option, and it's going to scaffold you from wherever your underlying policy is at. So let's say it's at 75%. It's going to take you from there to 86%, covering that 11% band of coverage. Then you can add on top of that the ECO, or the enhanced coverage, up to either 90 or 95%. There's a couple of different blocks in there, either a 4% band or a 9% band. Now, a couple key things to remember, and this would leave you with a small 5% deductible at the top. You don't have to buy these coverages like in sequence. Like you don't have to buy the SCO to get the ECO. You can kind of pick and choose what you're going to do and where you're going to leave gaps of coverage. So if you wanted to spend some dollars on that really top end coverage that's going to trigger and pay faster, you can leave out the SCO and leave a gap in that coverage right there and just buy that ECO. Again, taking either the 4% or 9% band of coverage. Or you could just buy the SCO. SCO and ECO are both federally subsidized crop insurance products, okay? The ARC and PLC programs at the FSA, which I'm going to talk about in just a minute, are not. You know, you go in, you sign up at the FSA office, you enroll in those programs. For ECO, it doesn't matter. You can be an ARC or PLC, either one. But if you want to buy that SCO coverage, you have to have that crop enrolled in the PLC program at the FSA. Here's an example with the coverage at 70%. That band of SCO flexes. It just takes you from wherever you're at up to the 86%. The ECO band does not change. It's fixed. 86 to 90 or 86 to 95, a 4% or 9% band. I told you I'd talk about ARC and PLC. This has been around since the 2014 Farm Bill. I'm kind of excited to see what they do in the next Farm Bill. I'm certainly glad I don't work in Washington because, you know, I got 3 kids and farm and work and stuff, and I got enough stress in my life without having to worry about writing a Farm Bill and all the things those people in Washington are doing. But I would echo Jeff's comments, you know, having your phone ready and making our voice heard in Washington, because I think, at least I know on my farm, you know, we went through 2012 and you know, he's right. We got to make our voice heard, and we don't want people touching our safety net, and crop insurance is our safety net. So the PLC program, I don't know what camp you're in. This program pays based on reference prices. And when I say I don't know what camp you're in, but in terms of where the market is going. So, you know, Matt didn't exactly give us the crystal ball and say, well, it's for sure going to go here, because he said, you know, if somebody says that, leave the room, right? But 370 corn or 840 beans or 550 wheat, the chances of our market, I think, for the 23 year getting down to those levels and staying below it for the market year average, I think are pretty slim. If that does happen, I think we're going to be in a world of hurt. So that being said, I'm not sure I'm going to have any of my acres enrolled in PLC just because I don't see that happening. And when I say the market year average, that starts on September 1 of 2023, because we're talking about the 23 crop right now. That's going to roll all the way around to August 31st of 2024, and then we'll know what the marketing year average was. They look at all the corn and all the beans and all the wheat sold in the country during that time and average that price together. If it's below those levels, we get paid under PLC. I'm thinking that's not going to happen. So for me, this is a crop insurance decision. Do I want to buy SCO on my crop insurance policy? If the answer is yes, then just sign up for PLC. If the answer is no, I'm not too worried about SCO, I don't think I'm going to spend any money there, then I'd probably put my bucket in the ARC program. ARC works just like crop insurance. It operates off of a historical average. for both yield and price, multiplies it together, take it times 86%, you get a county level coverage, and then we wait until the end of the season in the fall of 2024 to see what the price was and what the yield was, and if it was less than a revenue guarantee that we started with right now as to whether or not we'll get a payment. Our friends at the FSA office would like you to sign up right now, by the way. March 15th is the deadline. I've talked to a couple of them recently. They're not very busy, and don't wait till the last minute if you want to make those changes. We're not going to talk about this blanket written agreement. This is really for up north. If you farm in some of those counties that are really far up north where double crop beans have not been insurable historically, they are now. That's a possibility. We could talk to you all the hashed counties up there, but we're pretty far south of that where double crop soybeans have typically always been insurable in this area. The I-70 corridor is kind of a breaking point. It seems to me like south of I-70, pretty much everybody grows wheat and double crop beans. You get up north of I-70, then it starts to be a hit or miss proposition whether people are doing that or not. But I want to move into another thing that's kind of new and exciting for me to talk about this year is livestock insurance. And you heard Matt say about the cattle. I'm a cattle producer. We fed hogs back in the day. We don't now, other than a few for butchering that my son did for his FFA project. But I guess, let's see, it's been about 2 weeks ago, I hauled some fat cattle in and got probably 25 to 30 cents a pound more than what I got a year ago. And as I'm thinking about the cattle I have on feed right now and where they're going to be at in 6 months or 12 months when they're ready to take to market, I might consider looking at this livestock risk protection program, because this functions kind of like crop insurance in that what you're trying to do is protect a certain level of revenue out into the future with your livestock. It's a little different from crop insurance in that with corn and soybeans, you set the spring price in February, you set the ending price in the fall, or the harvest price. That's it, those two prices. The livestock program changes every day. They put out new offers. So there's a little more to it, but with technology and the ability we have to communicate via text and email and stuff, it makes it this available to producers in a much better way than it was when they first rolled the program out, I don't know, 8 or 10 years ago. It was a little more cumbersome back then. We've come a long way, and actually Farm Credit Illinois has 2 agents specifically designated for handling our livestock program. I know some about it, but those guys, or that guy and that gal, they know a lot about it. And so you could talk to either one, Adam or I here regionally. We will set you up with John or Sherry and can get this livestock program going. If you're interested in this, so if I'm getting $1.50 or $1.60 for my fat cattle right now, and I've got a bunch of 400-pounders on feed, and I'm thinking, hey, in 12 months when these guys are ready to go to market, I can buy 95% of a $1.65 price right now and ensure that I'm going to get that 12 months out from now. Am I willing to spend $30 a head to do that, or whatever the price is? That's something you may want to entertain. Getting into this program costs nothing. When you sign an application for crop insurance, corn and soybeans, right, you're saying, hey, I'm going to insure all the acres of this crop I'm going to grow in the county. With the livestock program, it's just a little bit different. So you're going to sign an application. You're going to say, hey, I want to get in the system, but that commits you to nothing. So if you even have a little interest in this, what I would encourage you to do, you livestock producers out there, sign an application and get in the system. Because once you've done that, you're not committed to anything until you sign an endorsement. An endorsement is when you put coverage on a specific group of cattle based on what class, is it steers or heifers? Is it dairy cattle or beef cattle? Are you talking about feeder cattle? Are you talking about fat cattle? So there's a bunch of different options to pick there. But none of that coverage is put in place until you have that endorsement. So you can fill out an application, and there's no cost with that. There's a picture of our man, John Stroh, out of Effingham office there. He's our point guy on the livestock, and he'll send you these quote sheets or whatever so you can look them over. It's a good deal, and it's pretty exciting. I want to talk a little bit to you about premium. I don't think it's any new information or any surprise to any of you in this room that you paid more for crop insurance this last year than probably what you have maybe ever, but certainly in a long time, right? I mean, are you with me on that? Yeah, I see a bunch of people shaking their heads. Yes. So let's talk about what caused that, and let's talk about what we're expecting or anticipating for 2023. What's driving that premium? The first thing is the APH on your farm. Does it make sense that if a fella has 150 bushel APH and his neighbor has a 200 bushel APH, that the one with the 200 might have to pay a little bit more for coverage? His APH is 50 bushels higher than the other guy. If you take that times $6, that's $300 an acre. So the insurance company is going to insure $300 an acre more to cover this guy than the other guy. So it kind of makes sense that his rate will be just a little bit higher. In building that APH, there's a number of things involved with that, and I could probably stand up here and talk to you for another hour about all the endorsements and how they work, and I promise I'm not going to do that. You guys would throw me out of here. But I'm kind of nerdy like that. I do like studying the intricacies of the crop insurance policy, and some people that work here with me, I'm sorry I put you through that, but I like to know how it works, and I want you to understand all of these things, trend adjustment, yield adjustment, et cetera, they all mean something. I think of them as gears. They're in your policy, and the more of those gears that you have turning and working in the policy, the more it generates premium cost. Take, for example, the YE. That's the yield exclusion. You guys know it as, hey, that's the one that throws out the 2012 yield. Yes, it does. But when that is in a unit on your policy, that gear is in there turning, working, generating premium. Once that yield exclusion year 2012 disappears, which for some of us, it's going to be this year, that's going to fall out because your APH is only for 10 years, right? So we're 10 years out from 2012. If those 2012 start falling out, that will actually have a positive effect on your premium. So the more of those things that are working in the policy, the more it generates premium cost. Another thing, a third thing, is unit structure. Most of you are familiar with this, and probably, whether you're on enterprise units or optional units. Enterprise is, where we're putting things together. We want to make the premium cost lower, so we're going to put together all of our farms and spread that risk out across all of our acres, and that makes the premium cheaper. Optional units is where we try to keep everything apart. We separate things out. It elevates the probability that we might have a risk, a loss at some point, because we have everything separate by farm or by section and share and so on. So that raises the cost of the premium. There's some more things in there with all those other acronyms, but that's the gist of it, right, for unit structure. A fourth thing is your coverage level. 50% is the cheapest, 85% is the most expensive. Next. Market volatility. This one's the hidden one. I like talking about this one. The other ones you guys kind of all know about a little bit. Here in February, starting tomorrow, they're going to set the projected price for crop insurance. The spring price, the beginning price, whatever you want to call it. Okay? I'm hoping it's going to be somewhere around $6 for corn and $14 for soybeans, but we'll see. At the end of the month, sorry, let me back up. During the whole month of February, every day the market is open, they post a close, and whatever the December corn future is and the November bean future, they average those together for the month, and that's how we get our spring prices on crop insurance. The last 5 days of February, they average the market volatility. Market volatility is just a number, and I'm not going to stand up here and pretend to you that I even understand the algorithms and the calculus behind how they derive this number out of the market, but somebody much smarter than me figured it out. Corn right now is like a 0.21, beans are like a 0.16. If you want to back up to like 2015 and 16, so to kind of give you an idea, corn was like a 0.15 and beans were like a 0.12. So we're significantly higher than where we were. But let me ask you this question. The higher the volatility, the more expensive the premium. Does anybody want to go back to 2015 in terms of markets? Good. I don't either. In 2015, 16, 17, 18, what was the price of corn? It's like $3, right? Beans were like what? 9? So now we've got much better markets. We got higher volatility. Volatility is simply uncertainty in the market. It means, how much the market's going to do this, right? Well, in 2014, 15, 16, 17, in those years, the market was doing this. Very flat, okay? Stable, predictable, flat. There was not a lot of this up and down stuff. So in terms of crop insurance premium, volatility, bad. in terms of the market doing this, there's some hidden opportunity in there. What does this provide us with? As that market moves up and down, think about Matt's conversation to us this morning. What are we provided with when the market's moving? Selling opportunity. That's the silver lining to market volatility. The more volatile the market is, the more opportunities we have to price some of those bushels. We can't control it, so we just as well take advantage of it. And when we want to take advantage of it, well, how do we know how many bushels we should sell or what we should do? I'm going to back you up to the 75,000 bushel example I had at the very beginning. You're going to sit down with me, or you're going to sit down with Adam, or your crop insurance agent, and we're going to go through your APH. We're going to figure out how many bushels you have to market for the crop year. And then when those rallies happen, even starting right now in January, February, you can be executing sales and protecting some of that revenue for this 2023 crop year, okay? Those are the things that are driving premium this year. To me, the way it looks right now, premiums are going to be pretty similar this year to what they were last year. So we'll see how February turns out with our spring price and what that market volatility does. So we've talked about all these things right now. We're going to move into our last point, which is strong business partners. We're glad to be in partnership with you at Farm Credit, whether it's on the crop side or the loan side. When we meet with you, please be as transparent as possible. For your benefit, if you're not working with us, with whoever you are working with, we want to have your policy set up and make sure that we've covered every avenue and think through what's going to be happening on your operation this year. If there's any significant changes, whatever. And I love this point down there, the second one from the bottom. What is your break-even cost? I'm not sure, Matt alluded to this a little bit earlier, I'm not sure how you can formulate a good marketing plan if you're not even sure how much it costs you to put the crop out. And you say, well, I haven't even booked all my inputs for this year. I don't know what it's going to be or whatever. Well, you probably have a pretty good idea if you go back last year and say, I spent X number of dollars in chemical, I spent X number of dollars on fertilizer, et cetera, et cetera. And last year, that would give you a baseline for looking at what this year might be, and then cross our fingers that it's a little bit less, right? Knowing that break-even cost. A couple other reminders we want to consult with you about, and right now some of you have reported your production for last fall. Some of you still have yet to report your production from last fall. You do have a little bit of time to do that. Probably we'll try and do it when we meet with you to go over renewals. But I just want to remind you, we talk about this every year, and make sure that you guys understand the difference between hard records and soft records, and exactly what the government expects of you in terms of record keeping. It's been my observation that over the last, 2 or 3 years, and this is just me talking, I think I'm seeing more audits happening by the RMA. I don't know why that is. Maybe it's just me. I don't know. But when they do an audit, we want to make sure that you're in a position that we can prove your production, so you won't get a yield penalty or anything like that, and there won't be any questions asked. No red flags going up or anything like that. So to do that, when we're harvesting and reporting our production, we need to be able to support what we report. That's our little tagline. And we do that with soft records. If your grain goes anywhere but the local elevator, anywhere but town, you got to have a soft record backing up where that came from and what farm, what county, what crop, etc. So like, for example, on my farm in a few hundred acres in a couple of counties. Let's say I've got one grain bin and there's 10,000 bushels in there. It might have come from 6 different places in 2 different counties. As long as you have a notebook, that's what I've got, at the bin, and you're writing down the date and the time and the bushels and how many you estimate to be in the wagon, the truck, the trailer, whatever, going in that bin, that counts as a soft record. Maybe you're going to use your combine monitor. Cool, that counts as a soft record. And you say, well, it's off 8%. Okay, but it's off 8% on everything. We know that. So then once we have a total from the bin, we can just back it out proportionally to those farms. Or if you have a scale on your farm, whatever. The important thing is that you have something. Where you get hurt is when the auditor shows up and you're like, well, I think it did about 180. That's not gonna cut it, okay? Hard records are simply, hey man, I took the grain, I hauled it to town, here's my scale ticket. And that's cool as long as you wrote something on the scale ticket to say it came from the Smith farm or it came from Mom's 40, because if you got 1,000 of these tickets and nothing's written on them, how in the world do you know where any of it came from? So, and believe me, I get this a lot. oh, I try to get, the hired man or my brother or my uncle that helps or whatever, and they won't write on anything. I've asked them and begged them and pleaded with them. Okay, but we really got to try hard to do that so that we're not sitting, with our tongues tied in the middle of an audit. We just don't want to be in that situation. So a little bit of record keeping goes a long way in terms of crop insurance. Just about, we're in the home stretch here. I want to tell you about us here at Farm Credit Illinois. For those of you that don't know, there's like 102 counties in Illinois. We cover the southern 60. That's Farm Credit Illinois. We have 14 regional offices. You're sitting in Highland today. Our regional office is right down the street here in Highland, Illinois. We have 33 full-time crop insurance people. There's our mug shots. I'm not going to stay very long on that screen. You might be able to find me up there. I don't know if it looks very good. But I want to also talk to you about this slide right here. And this, I'm really passionate about this slide. Farm Credit Illinois, we're not here to just line our pockets and do whatever we can to make ourselves rich. I don't get paid on commission. I get paid a salary. So whether I'm selling you tons of insurance or a little bit of insurance, it does not affect my pay at all. We want to do what is right for you and what is going to help you be successful on your operation. This is a cooperative farm credit. So our success is directly tied to your success. When you guys are successful out there in your operations, we're going to be successful as your cooperative. And we all get this. Most people that work at Farm Credit, like I told you, I farm, but most people at Farm Credit are tied to ag in some way. If they don't farm, they come from a farm family or a farm background, or they have family, whatever, they're tied to ag in some way. And we understand where you guys are at. We're very passionate about helping you. The money, the extra revenue we're driving off of your crop insurance and your loans helps us to put on programs like this one where we can bring in these speakers. It helps us to keep our interest rates low up front. It helps us to pay patronage. Some of these patronage, these programs that we're doing in Farm Credit Illinois, did you know many other farm credits don't even do things like that? We are very unique in the industry. So just, you're a member of a great cooperative. And I am extremely privileged to be employed. I've actually, I've been a loan member and a crop insurance member of Farm Credit since about 2002. When I got out of college, I started working for the company in 2014. And it's a joy and a privilege to work for them. And I'm so glad, we're so glad to have a seat at your table. We want to work hard to earn that and to keep that and to be an assistance to you in your operation, whether it's on the loan side or the crop side or both. Also, I want to thank our AIP partners that we work with. There's 4 insurance companies. I think they're all represented here today. I'm not going to go around and introduce everybody, but if you're an insurance person, they all have their little logoed shirts on so you can see who they are. Just give a wave. I'm pretty sure, there they are. Yeah, some of them in the back. Thank you. They're helping provide lunch today, so thank you very much for that. That's a very important thing for me. And I think that is about all I've got. So thank you very much. I really appreciate your attention today, and we'll move on to our featured speakers.
Andy, thank you, sir.